So first things first, Tesla's latest advertising campaign has gone live here. I don't know how much they spent on this ad, but clearly it's attracting a lot of eyeballs on social media. A Cybertruck having been shot up with a Tommy gun. Check this out. Absolutely epic. I mean, this is iconic. What else is there to say? Now, obviously, I'm trolling about Tesla having spent a cent on this, but this clip is going viral on social media, and you can understand why. I mean, how epic does this look? Imagine you're driving down the street, you see this thing, you go, what the hell? This has been shot up and not a single bullet has gone through. What? I want one. Elon Musk himself confirming, quote, "We emptied the entire drum magazine of a Tommy gun into the driver door, Al Capone style. No bullets penetrated into the passenger compartment." Try doing that with your F-150. Actually, don't try doing that. It'd be very dangerous. And check out this great shot. Seriously, a rolling billboard. I mean, how good does it get? Not much better than this. And now this from Morgan Stanley. Cyber caution. Earnings down in 2024. Price target to $380. Previously $400. A very, very small decrease. And having looked over this in advance, I can tell you guys, I get the sense that Morgan Stanley are doing their best to justify what to many folks on Wall Street, many investor clients of Morgan Stanley's, might sound like an insanely high price target given the panic, the fear, uncertainty, and the extremely short-term focus around Tesla. I feel like they're trying to justify it. Maybe you'll agree. The opening lines. How can we be overweight Tesla stock despite the company's caution on macro, consumer, Cybertruck, and Mexico? Can a growth stock work if earnings don't grow in 2024? We think this comes down to where the $5 billion of annual R&D spending is going. Tesla's Q3 results were below consensus, but the commentary on the analyst call is what set the tone for the immediate stock reaction, aka massive overreaction. By the way, thanks for the discount, I was buying. In our opinion, Q3 2023 was one of the most cautious Tesla conference calls we've heard in years. Among a range of cautious commentary, by the way, you would expect that given this is the worst economic situation since Tesla has been a public company, especially for the automotive industry, literally the worst. Among a range of cautious commentary around the macroeconomic environment, rising rates, consumer strength, affordability, Tesla CEO Elon Musk, Tesla Techno King, Elon Musk, and the management team went out of their way to manage investor expectations around their current high-profile Cybertruck launch. They certainly did. I mean, this is par for the course. Obvious things were said, but it's a brand new technology, loads of new stuff. This is going to be production hell round 2. Shouldn't surprise anyone. But sometimes pointing out the obvious can cause quite a reaction, including difficulty of the ramp into 2024 and negative impact on margins and cash flow of Cybertruck over the next 18 months. Cybertruck, Tesla's only major new product launch into 2024, is clearly expected by the company to be margin and free cash flow dilutive. Other than an expectation of continued design and production cost savings and high utilization levels, there was little else offered in the way of the now prevailing narrative that 2024 earnings may decline from 2023 levels. Over the near term, we'd expect the impact of negative 2024 earnings revisions to matter more than the long-term optionality to new products and new technologies. Well, I agree in terms of mattering more to short-sighted investors/gamblers. What's going on with the Cybertruck? One of the most important takeaways from the Q3 print that bulls must confront is the change in sentiment around the around the Cybertruck. I'm looking forward to hearing this supposed change in sentiment. Much attention has been paid to the over 1 million orders, which has skewed towards more bullish expectations of the model's volumes. We regularly speak to investors anticipating over 500,000 annual volume. For what it's worth, I expect that Tesla will ultimately produce and sell more than 500,000 of these things per year as well. Not the 250,000 that Elon Musk referred to in this evening's call. Beyond questions of volume, it's clear that the ramp of this model will be margin dilutive for the time being. In terms of manufacturing challenges and ramp, there are a lot of firsts with the Cybertruck, including the 48-volt low voltage system, 800-volt powertrain architecture, unprecedented large metal stampings, largest flat glass installation on a production vehicle, a host of other firsts, including new manufacturing processes for consumer-ready fit and finish. So I'm still waiting for that change in sentiment. All Tesla did was point out the obvious shit that it's going to be difficult to ramp. And Elon in the past has also used this 250,000 number as a ballpark. Must be further on. In our March 9th note, has Tesla outgrown the Cybertruck? We mentioned how much the company has changed since Franz von Holzhausen threw a metal ball at the armor glass of the Cybertruck in November 2019. And how, from a financial perspective, Cybertruck may be more of a sideshow to the Tesla story. And on that, I definitely agree. Then again, just about every vehicle that they have is ultimately going to end up being a sideshow as well. Relative to the software component, FSD, robotaxi, blah, blah, blah. You've heard the spiel. They're all specs. What investors are learning now is that Cybertruck may represent a more material headwind to profitability, not unlike challenges faced with Model X Falcon Door production and early automation attempts for the Model 3 production, aka production hell, in 2018-2019. While Tesla has shown an ability to turn manufacturing challenges into commercial opportunity, it may be difficult for investors to see the payoff for some of the unique Cybertruck innovations that could be scaled across the broader Tesla model lineup over time. Still no sign of that change in sentiment. What the fuck are they talking about? Tesla conveyed a message of caution around growing too fast into an increasingly uncertain and high interest rate environment. That's fair, but how much of the caution is related to slowing demand for its already ubiquitous product lineup and increased competition? Approximately zero, in my opinion. Interest rates have approximately doubled in the last 18 months. Doubled. Repayments for vehicles have approximately doubled in that span of time. Doubled. I mean, they haven't increased 5% or 10% or 20%. As I've said, a lot of people seem to be missing the forest for the trees here. Oh, what if there's no demand? Maybe interest rates have nothing to do with it. Once again, I want to reiterate, this is the worst time for the, quote, automotive industry since the global financial crisis 15 years ago. We note that Tesla's share of the US EV market fell below 50% for the first time since the very early days of the company's history, while Tesla reiterated the 1.8 million unit target for this year. Most of the forward-looking commentary took a cautious tone around volume expansion, including very gradual production ramp of Model Y in Austin and Berlin, and limited ability for the Shanghai plant to produce above its current maximum capacity. I might be hallucinating here, but did Tesla say anything at all about Shanghai's capacity? Because in case you guys missed it, I did point it out. They've increased the install capacity figure in their earnings report for Shanghai by 200,000 this quarter. I suspect this is down to the improvements in the refreshed Model 3, deleting a lot of parts and processes. This won't stop. They will continue to eke out more capacity. Where is the $5 billion in annualized R&D spend going? According to the company, the majority of this expenditure is related to the development of the 4680 cell, new product architecture, Cybertruck, and Dojo/Optimus. We note that R&D expense hasn't received much attention from investors in recent years. But today, the R&D spend, up, is rapidly approaching its recent operating income trend, down. Tesla investing heavily in the future, especially AI. And Morgan Stanley are right, a lot of investors are kind of ignoring this. They will probably regret doing so. Following Q3 results, we make material downward revisions to our 2024 forecast from top line to margin and EPS. Our revised 2024 non-GAAP EPS forecast stands at $2.41 versus $3.89 previously, and would represent a 19% year-over-year decline from our 2023 forecast. Now, this is a massive revision down, and fair's fair. I think just about everybody overestimated Tesla earnings for this year. The aggressiveness with which they've had to cut prices to keep moving through volume, taken most people by surprise. Price target lowered to $380 from $400 per share. Of the $20 reduction, $16 is related to our lowered automotive valuation, which now stands at $86 per share. Worth pointing out, by the way, folks, $380 price target, only $86 of that comprised of automotive. $550 bull case remains unchanged, so too the $120 bear case. By the way, I've got to give credit here. They have a pretty decent spread between the bull case, the base case, and the bear case. I like to see that. Like, I've seen a lot of folks who have a bull case that's almost exactly the same as their base. In a bear case, it's almost the same. What's the point? The whole idea of these things is to stress test. What is the absolute best case, the worst case, the middle of the road? Not what's a little bit better than what I think is going to happen, or what's a little bit worse than what I think would happen. And hear more of what seems to be justification to their clients. How can we remain overweight Tesla following these negative revisions? And how can we defend a growth stock that appears ready to enter its second consecutive year of earnings decline? In our opinion, Tesla is much more than an auto company. Oh, wow, what a controversial statement from Morgan Stanley. Obviously, I'm kidding. Please don't tell that to Craig Irwin or many of the dimwits on Wall Street. Of course, Tesla is an automotive company, and we believe it will be for many years to come, but out of our $380 price target, our valuation of the core auto business is $86 a share, leaving 77% of our target derived by network services, mobility, third-party battery and FSD licensing, energy, and insurance. This is quite interesting. We receive significant pushback from our clients for including non-auto revenue streams in our valuation. I'll bet you do. Remember, on Wall Street, it's illegal to put anything in your spreadsheet if it's not already a business. You're not allowed to look at any signs that it's developing, it's evolving, but it's coming soon. You're not allowed to do that. You have to wait until you get slapped in the face after the fact. So I do understand this. Morgan Stanley are breaking the investment rules on Wall Street. Naughty, naughty. No wonder they're getting pushback from many of their clients. You're not allowed to put that in your spreadsheet. Take it away. Our overweight thesis is highly dependent upon these business lines becoming far greater drivers of earnings, with clear milestones and proof points backed by accompanying financial disclosure. The Tesla on display in Q3 2023 largely reflects the pre-scamdemic company. Tesla's model lineup has barely changed since it launched production in Shanghai in late 2019. By 2026, we expect to see a significantly broadened range of new products, including Cybertruck, Model 2, final mile van, purpose-built rideshare vehicle, and other new models. Tesla offers compelling long-term free cash flow growth potential. On this, I most certainly agree. If you've seen my valuation model, you'll know what I mean. From a 2023 base, we forecast Tesla EPS grows at a 27% CAGR, compound annual growth rate, through 2030, achieving $5 a share in late 2025, $10 a share in late 2027, and $15 a share by mid-2029. While it's important to factor in near-term and real-time headwinds into 2024, we feel it is also important and reasonable to consider the long-term potential of the products and services being commercialized by the company. God damn, I love to hear this. I'm going to read that again. Clearly, Morgan Stanley are doing that, but they're speaking to their clients here. Hey guys, that stuff we're not allowed to put in our spreadsheet, it's actually kind of important to consider the implications if they pull it off. One more time. We feel it is also important and reasonable to consider the long-term potential of the products and services being commercialized by the company. Could not agree more. A lower bar. Tesla's operating margins are currently lower than government motors. What a shock. Enjoy the ICE vehicle profits while they last, GM. While 5% type gap operating margins are not something many analysts or investors would have predicted, can you confirm? I didn't. That is precisely what the company just achieved, and it has helped set a far bar for street expectations looking out to 2024. Strong balance sheet and self-funded business model. Low risk of equity dilution into a potential hard landing scenario, as in Tesla needing to raise more capital and dilute shareholders. Yep, not going to happen. I've got like $26 billion now sitting around doing approximately nothing. Multiples more than the company's ever raised in their history to date. They'll be fine. They are now a self-funding entity. Versus other auto and auto-related companies under our coverage. We believe Tesla fundamentals can prove more resilient in a more challenging economic scenario vis-a-vis competing OEMs. Agreed. Tesla ended Q3 2023 with nearly $22 billion of net cash. Changes to our estimates. Revenue decreased a little bit. Gross profit decreased a little bit. Operating margin decreased a little bit. Non-GAAP EPS decreased a little bit. We remain overweight with a $380 price target. And a bull and bear case remain unchanged at $550 and $120 per share respectively. Our $380 price target is comprised of 6 components. $86 a share for Tesla's core automotive business on an embarrassingly low 7.4 million units in 2030. Tesla Mobility at $82 per share, basically the same size as the auto business, just for context. On DCF with around 600,000 vehicles, aka robo-taxis, at $1.80 per mile by 2030. Tesla as a third-party supplier at $41 a share, which as I mentioned earlier includes FSD licensing and battery licensing. Energy at $48 per share. Insurance at $8 a share. Network services at $115 per share, which includes 22.1 monthly active users and $180 average revenue per user. They're talking about 22 million Tesla vehicles on roads in total, Tesla fleet basically. Now, I just wanted to again point something out for context. They've got energy at about half the valuation of their automotive business at the end of the decade. Now, I do have to give some credit to Morgan Stanley. They are clearly, in their own words, getting a lot of pushback from their clients. Hey, why are you evaluating things that haven't happened yet? I don't understand and you're not allowed to do that. They appear to be getting a lot of questions. How can you be recommending Tesla stock? How can you be overweight? And gross automotive margins are a little bit low this quarter. It's the end of the world. And rather than Morgan Stanley putting their tail between their legs, their testicles in their purse, bending over and doing what their clients would like them to do, they continue to maintain a pair of nuts and encourage their invested clients to maintain a long-term perspective and consider the things that Tesla has yet to do that are inevitable and just around the corner. Hats off to Morgan Stanley. For once, the only roasting necessary was on their 7.4 million units in 2030. Well done, guys. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, snake oil salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link in the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.